pressure on supply for tin is a bit of a concern for us. We'd like tin users to be fairly confident that at $25,000 to $30,000 a ton tin, there's plenty of supply, and I think there is. I think it will get there.
So, if I had to ask you, what is your attention today and for 2021? Would that be the tin price and the supply, as you just mentioned?
No, I think yeah, we watch the tin market very closely. Naturally, having a large shareholding in Alphamin, but I think the tin market has always been a little bit bumpy, but I suspect that given this higher price, it is going to draw in more material into the market, because previously a lot of the upper end of the cost curve producers were negative. So this will ease things a bit, and hopefully people like ourselves who have brownfield potential expansion can start looking to line that up and move that in to help alleviate the squeeze.
Absolutely. So have you looked at any exciting project or update you can reveal to us yet?
No, we can't tell you what our new projects are, because otherwise everyone's going to buy the shares and we won't be able to afford them.
Exactly. Not yet.
So we're certainly looking at some interesting projects. We obviously are, I think, like the rest of the world, focusing quite strongly on battery metals, on all the new green metals and other commodities that are in that space. There's some interesting work being done in that sector. Naturally, copper remains everyone's favorite. Copper, gold. Gold has run well, but it seemed to taper off a little bit.
Copper is doing well. The price of copper has been quite good. Yeah.
Copper's doing beautifully, which of course works against us, because we would ideally like to be getting in when the commodity is still fairly soft, in that it affects prices. As soon as the commodity price of a project runs, then their market cap commensurately goes up. And it does start to push or squeeze the economics a little bit, particularly if you've got a big build project coming up and you need to sink a lot of capital into it. The metrics for the investors who can back those kind of capital build-outs start getting squeezed a touch. So, and also you get concerned, are you buying at the high of the market? And you do your economics at these prices, and 3 years hence, everything softens, and you're left holding the baby and the bathwater. So yeah, in mining, there's never a dull moment. Either things are going really well, or we are in complete depression mode. We have a completely bipolar personality in this.
There's no middle ground. Yeah, it's a hate and love. That's why it works.
Yeah, indeed.
So looking back at obviously the last 12 months and the challenge that the one we don't want to mention, but COVID obviously has impacted. What I want to look at with you is maybe the way that maybe you change your business model or you adapted to it. Do you think there's a new way of thinking the financing of junior project, especially in a post-pandemic environment?
I'm not sure there's a different way in financing it. Obviously, in terms of doing your due diligence and getting to grips with the project, it has made it more difficult in that we obviously rely on a lot on video calls and desk work. But for us, we like to get out and go and walk the ground and get a sense of where the project is, what the environment looks like, and everything fitting into that. I do think in terms of operations, the COVID pandemic has exposed the weakness of just-in-time logistics, systems, methods, inventory holding. The whole world ran on the premise that the ship will arrive when it's meant to arrive, and that the warehouse and suppliers will have the equipment that you need. And all of a sudden, you're left with potentially critical bits of machinery standing, and you don't have the necessary spares. because you always believed you could get them if you needed them. And suddenly you can't. And even if you can, you can't get them to where you want them. So I think what we're going to see is people are going to start increasing their inventory of critical spares, and trimming back on their reliance on just-in-time type of support mechanisms, which does increase the financing people are going to require.
But on the short term, I guess it's the increase of finance, but the impact on the long term, when you have actually adapted or anticipated the shock, it's much lesser, I would say. And just suffering the cost of obviously the delay in operation or production or whatever stage you are at.
No, absolutely. So ongoing and producing companies will just increase their inventory of spares and critical inputs. From a finance new projects, it does add a component that we didn't necessarily account for as much in the past, in that you need to stock all of those critical spares and other components at higher levels than one would normally do in the past. So it does add a little bit more pressure on the financing of new projects.
Yeah, absolutely understand and agree with you. You were mentioning something around a bit earlier around battery metals and obviously the role it can play in green economy. So would you say, and would you agree that there is a need for juniors to start looking at commodities that goes into that direction? Because I had a really interesting discussion with an investor and saying it only focuses on battery metals and commodities that will go into the net zero goal and the decarbonization. And will that be one of your focus as well? And do you think that's where juniors should be going?
It certainly will be much higher on our radar than it was previously. And we certainly won't look at a coal project. In the past, we'd look at thermal coal projects. We won't currently, and probably even coking coal projects. So there is a definite shift in the global economy towards more green metals, commodities, processes. And is it a space for juniors? I think it's an interesting opportunity. There are various metals and other commodities that haven't necessarily been explored or exploited or taken note of in the past, which now have a completely different future outlook pinned to them, which definitely make them interesting. And we are seeing increasing number of funds around investing only in battery metals and portfolios that replicate what they are expecting to go into solar power or other electric type systems.
Okay. And so looking now closer to a destination that we love, the DRC, the place that we love to travel to. You've been lucky to go there during the pandemic. I'm looking forward to myself. I know it's a territory where we know a lot of majors that have made obviously home there, and you are also a proof of successful operation when it comes to junior mining. I want to hear from you, for those juniors that are considering the DRC as a project development destination, what advice would you give them?
Look, the DRC is the most extraordinary place. It is a complete freak of nature in that it has all the geological mineralization that one could ever wish for in grades that one won't find anywhere else. And I think that is the important component for us, at least, is if we look at a project in the DRC, what we are looking for is something that has significant margin for error. And what I mean in that, when we looked at Alphaman, if you took the tin grade that we have there, it's about 4.5% tin, that is equivalent to around 18 to 20 gram per ton gold. Now, if somebody comes to you and says, here, I've got an 18 gram per ton gold, signed off, resource compliant NI 43-101, you don't ask many questions other than, what's your bank account? And how much can I give you? So, yeah, absolutely, because there's margin for error in that. So you've got to work out what is the rock value in situ worth. What do you think you can produce a product? So in Alfman's case, it's probably $1,000 a ton. One can probably work around $500 a ton all in to get a product to market. So if you're looking at projects, those that are sort of also ran or kind of within the general mix of grade anywhere else, be sure that you've dotted your I's and crossed your T's, because the DRC does occasionally throw up a few surprises on the cost side. It also throws up a few surprises on the grade side. So, you know, one just has to be able to enjoy the grade booms and be able to navigate through when things are a little bit tougher.
Yeah, I agree with you. And go for it. Sorry.
And make absolutely sure you understand the mining code, that you're on complete compliance with your taxes.
Yeah, that's the topic I haven't mentioned yet.
Yeah.
You know, this one is the one full of surprises. But it's interesting what you said about the DRC. I had a discussion with Marna from Ivano, and mentioning that obviously potentially new discovery as well. And I feel like the DRC has been this for years, is that you just, you know, dig and then you find something and the discovery is incredible and the grade is better than anywhere else. And obviously it goes with the challenges. So you have to be able to take on the risk to go with it. But the reward is usually absolutely incredible if you're committed to the country as well.
Absolutely. You know, you can't go there lightly.
Yeah.
As you say, you have to be committed. And the grades are just extraordinary, but there are reasons that they haven't been developed. And you need to know what those reasons are before
and be ready to tackle them.
Yeah, and have at least a plan A and B in terms of how you're going to address them. But you know, we've operated in the DRC for a long time, and we think it's a terrific destination. People talk about risk in mining. Your greatest risk in mining is your grade, because you can't do anything about it. Yeah. You know, legislation comes and goes. Political instability comes and goes. These things are transient, but your grade is not transient. It's what it is, and you cannot do anything about it. So much rather have a stratospheric grade project in what is deemed currently possibly a risky jurisdiction, than have a mediocre grade in a safe jurisdiction.
If your objective is to get some good return on investment, and yeah, absolutely.
Yeah.
I mean, you prove that it's worked. You've been here for years. And again, we're not hearing about the major, and that's why I really enjoy about this, that juniors need to also hear that message. You don't need to be a major to be successful in the DRC. And that's important as well.
And I think that is an incredibly important point, is that you can be a junior with a project that has great metrics. So you are able to run profitably at a far smaller scale than you would anywhere else. And scale goes to risk, because it defines quantum of capital you need. So if you can get something like Pangea is a very, you know, it's our starter mine. It's what is going to generate the cash that'll unlock the rest of that region. Absolutely. And we know that there are deposits elsewhere. And personally, I am 100% convinced that we built the mine in a suboptimum position, but it was the best place that we knew at that time. We will find where we should have built it in time, and it'll be absolutely stupendous. And we will find it with money that Alfman itself generates.
Of course.
What a wonderful place to be. You know, where else in the world can you get that right?
Great. I love this message. And you heard Boris. If you don't know where to go and you can find your travel, the DRC, you know, you can believe that. Indeed. Thank you so much. Thank you so much for that, Boris. I really appreciate had this moment with you, and then give some positive as well outlook on the next year to come, and obviously on some destination that sometime not have the best light. So it's always good to have you, ambassador of the DRC, to speak up and just share what are the good that's happening as well. It's not just the challenges.
Yeah, everywhere has its challenges, and thank you very much for your time, and yeah, it's always great talking to you.
That's a pleasure. I hope to see you soon on site.
I look forward to it. Thank you.